Brunner Rosa, CEO of Rosa & Rubini Associates. Good morning and thank you so much for joining us.
Good morning.
So let's kick off very quickly with the macro data. It's pretty interesting. We do see inflation perfectly in line with expectations. I was wondering, what's your first take on the data and what are your expectations in regards to tomorrow's numbers of the CPI?
Yeah, inflation data bang in line with expectations, with some plus and minuses here and there. Is signal that price pressure continues in the US with the PPIs clearly increasing quite substantially and likely feeding through the CPI figures that will be released tomorrow, as we know, and with the market expected nearly 6%, 5.9% in price increase in October. And that's a pretty high number by any standard. It's 3 times the Federal Reserve target, and under any circumstance, average inflation, or call it as you want, is still clearly a spike. So the question is whether this transitory phase will be really transitory, is here to stay. And during the last press conference, Chair Powell was pretty clear in describing what transitory means for the Fed. Is not a question of period of time. It could be a long transition, so to speak, as long as it doesn't leave permanent effects on the inflation dynamics. So it could last quite long, but if it doesn't leave a permanent effect on price dynamics, it's still transitory. Vice versa, there's a risk, and that's what the Fed wanted to highlight in the last FOMC statement and then press conference by Chair Powell, is that the Fed is a little bit less sure than before over the transitory nature of inflation. So tomorrow might be slightly above, slightly below, maybe bang on expectation. The point is we are around 6% figure, and that's clearly something that will for sure attract market attention. And as you said, the choice of the Fed governor and chairperson will have an important bearing on the future stance of monetary policy by the Fed.
Yeah, that's for sure. We're going to discuss it in a little while. First of all, I was wondering then what's driving the price action. We're seeing great trading in the past 2 months, new all-time record highs almost every trading session. So far, slightly lower. U.S. stock futures right ahead of the opening bell. Well, what's driving the price action? And certainly, do you think that it's possible to go ahead with new all-time record highs every single day until the end of the year?
Well, the market has already been quite extended. This price action somehow derives from the fact that the economy is reopening throughout the world, and some of the tensions that could have emerged in different circumstances, such as trade tensions between US and China, for example, are subdued for the time being. And somehow the market doesn't believe that there would be new restrictive measures at any point in time, even if there are variants of COVID going around that can instead, of course, trigger those new restrictive measures. The market doesn't believe that would be the case. Also, there are spikes in inflation which clearly scare the market off, but there's also central banks around the world that are also showing that they're willing to take steps in order to control inflation. We saw Norges Bank, we saw the Reserve Bank of New Zealand, the Fed announcing tapering, the Bank of Canada stopping QE, the Bank of England threatening to increase rates even if it didn't deliver. So clearly central banks are on the inflation case. And if inflation proves to be transitory, as central banks believe, that's all the better for the market. Now, it cannot last forever. Every boom has a bust, so market participants should be aware. Also because we do have the lessons of the 20s, not of this century, but the previous century, when we had the roaring 20s, when we had record after record after record, and then of course we ended up in 1929. So the market should always be careful in what they wish for. For the time being, it seems hunky-dory, and the market enjoys.
Looks like. Then let's move to an extremely important topic, the race for Fed chair, which is going to be extremely interesting. As we said already, President Biden met them both separately. I'm talking about Lael Brainard and, of course, Chair Powell so far. What are your expectations, and do you think that Jerome Powell deserves to be reappointed and or reconfirmed?
Whether it deserves or not, to some extent, is not up to me. Is purely political decisions by the president, who has to take into account the divisions within his own party that you mentioned before, and the likelihood of the chair to be approved by the Senate, because you really don't want the Fed chair to be subject to partisan kind of wars in Congress. It's much better if it has kind of a full mandate, full backing by all members of Congress, or virtually all of them. In this respect, Powell would be slightly favored to Lael Brainard because, as you said, he's a Republican, and by origin, of course, and the entire Republican Party will vote for it, and a good chunk of the Democratic Party will vote for it. While Lael Brainard probably will see the opposition of the entire GOP in Congress, in the Senate, and even if all Democrats would support a confirmation, might not be granted. So on this basis, it seems like Powell is still favored. Brainard is considered also to be slightly more dovish than Powell, who's considered to be more centrist. But the fact that there was this interview with Lael Brainard seemed to have contributed to today's price action, as we mentioned before, because people think that she might be, as I said, slightly more dovish. She will wait a little bit more than Powell before increasing rates, even if that is not going to happen until at least the second part of next year.
What would change for the Fed if Brainard was to be announced as the Fed next chair?
As I said, she's considered to be slightly more on the dovish side. She is a Democrat by origin, and somehow that would align the Fed with the presidency, and of course with the Treasury. And let's not forget that the Secretary to the Treasury is Janet Yellen, used to be a chair herself of the Fed. So somehow the amount of coordination that we may have between monetary and fiscal policy would be extraordinary, and that might actually be a good thing. And like every president likes low rates, you remember the battle by Donald Trump to have the Fed lowering rates, as they eventually obtained in 2019 before the pandemic. The fact that Lael Brainard might be appointed as chair might eventually mean, as I said, a slightly more cautious approach to increasing rates, and even if inflation were to overshoot on the upside, it may be slightly more patient, and that could be more favorable for markets. Having said that, we also saw that when the market gets really scared about inflation, it becomes impatient. It wants the Fed be able to react quickly and swiftly against inflation. It doesn't like doubt on the fight to inflation, because eventually inflation reduces the real value of investment in equities, bonds, real estate, and so on. And therefore, it's always a kind of a delicate equilibrium that the Fed needs to strike. On the one end, supporting growth and keeping rates as low as feasible, on the other end showing that they are resolute on inflation, they can act swiftly if and when needed.
So let's move very quickly to another extremely interesting topic, and of course we're talking about a Biden infrastructure projects. Congress passed a bipartisan spending package late Friday, and President Biden is expected to sign the bill into law very soon. The legislation directs tens of billions of dollars over the next 5 years or more to repair bridges, redesign intersections, and expand rail service and upgrade airports and power lines, representing the largest federal infrastructure investment in more than a decade. Manufacturers and construction companies are already struggling to meet increased demand this year as labor and part shortages delay output. Total construction spending and consumer purchases of goods both are running significantly higher than before the pandemic, according to federal data. And so far, what businesses are saying in the U.S. is that infrastructure projects to boost sales and prices. So pretty positive, of course, reaction. And of course, this is a project for the long term. So nobody expects a very quick and short term impact on U.S. economy. I was wondering, how could we describe this infrastructure bill? A milestone or just a compromise, considering the very huge difference between the initial proposal and the one that was approved last Friday?
You know, in Congress is always a compromise. It's very hard for a president to be able to pass a bill the way he really wanted, even this Congress that is dominated by the Democratic Party, both the House of Representatives and the Senate. The Senate is 50-50 though, and so Kamala Harris has the casting vote, but if one or two Democrats are against any plan, I mean, there's still not enough. So that is to say that Biden has to tread very carefully, because on the one hand he needs to keep the moderates on board, on the other hand he needs to keep the more progressive component of his party on board. So it's never easy, even before going and talk to the to the Republicans. He still needs to make sure the Democratic Party is united behind this bill. As a result, Joe Biden has a number of compromises to make, and that's the reason why this bill is the result, as I said, of a compromise. Having said that, 1.2 trillion is better than nothing. It's still quite transformative in what it can do in terms of infrastructure investment, which is something the country has been waiting for decades. Still, a large country like the US could easily afford twice as much, 3 times as much in investment, which is the reason why Biden said that there will be another 1.75 trillion social spending package coming up. But we saw how difficult it was to pass this one. We saw the battle on the debt ceiling that we had just recently, and will restart most likely in December, which means that it's hard for this presidency to pass very controversial bills that encompass a large spending plans. So we expect any bill in that sense to be the result of a long and difficult battle and eventually a compromise.
Great. Thank you very much, Brunner Rosen Rubini Associates. Thank you for joining us, and have a great day ahead.
Thank you very much. Till next time.